Hello, I'm Jennifer Gladstone, host of our series, America's Retirement Future. Today, we're going to discuss how private equity has led significant gains in state pension fund returns. With us today to discuss this topic is Farouki Majeed, Chief Investment Officer of the School Employees Retirement System of Ohio. Hi, Farouki. Welcome to the program.
Hello, Jennifer.
The Ohio School Employees Retirement System invests on behalf of more than 237,000 active and retired educators and public servants. Can you tell our viewers how exactly you work to guarantee the hard-earned retirements of school teachers across the Buckeye State?
Firstly, we invest for the long term. So our investment horizon is long. We can withstand short-term volatility in the markets that most people are aware of. Secondly, we run a very diversified investment program, invested across many different asset types, including public equity, fixed income, private equity, real estate. We are very focused on managing the risks across our investment program and also the fees that we pay in order to have external managers manage our assets.
According to a recent report from the American Investment Council, your fund's private equity investments generated over 15% return after fees in 2020. Those returns were the fifth highest of any public pension fund. Why have private equity investments for School Employees Retirement System of Ohio been so successful?
So we believe that the investment strategy that we've adopted in private equity has generated the kind of returns and success that we've had. And that is being focused on a certain area of the market that we think generates reasonable, good returns for the risk that we take. And this is what we call the middle, and small size of the private equity market. So our partners that we invest with in a fund, typically they acquire a private company that is of a small to medium size. And through their investments and their management, they increase the operational efficiency of these companies and generate higher revenues and earnings. And therefore, when they're ready to exit that investment 5-6 years down the road, they're able to sell it for a much higher price in terms of multiple than when they bought it at, and therefore that's able to generate a significant return for us. So our focus has been on what we call the middle and small end of the private equity market.
Many public pension funds and other institutional investors are beginning to embrace investment strategies that prioritize environmental, social, and corporate governance goals. How has your organization worked with private equity to focus on ESG priorities?
So it's been a focus of our organization in the investment program relative to all of the investment asset managers that we work with. We ask them about what are their policies and strategies relative to ESG. And many asset managers have incorporated these factors into their investment policies and strategies, including the UN principles of responsible investing and so forth. So this is something that's gained more interest in with asset managers as well as institutional investors like us. So we work to ensure that even the private equity investment partners that we work with have those kinds of approaches to their investments and the way they manage the companies in their portfolios.
Farouki, thank you so much for speaking with us today.
Thank you.
And I hope you'll all join us next time for our series, America's Retirement Future.